Hi, it's Adam Hewison. I'm coming to you as always from the digital studios of MarketClub, and the market we're looking at today is one called Starbucks. That's right, the people that make the coffee, and we've gone back to the highs that were seen in the April-July period of 2006. And the reason we want to go that far back is because these are important highs. You had the double top, which we've talked about many times before in these videocasts, and the pivot point, and of course the move down. Now, what we've also put in to save some time is our Fibonacci, which is our tool right here, and the Fibonacci retracement. So we measure from the highs right here, these highs right here, we go all the way down to the lows right here. This is low here, and then we give the retracements, which is 38%, 50%, and 61.8%. Now, as you can see, we've reached the 61.8% retracement level from the highs. So these are the highs right here, and this is the low, and this of course occurred in late 2008, and we've seen a significant rally, a 61.8% rally to be exact, and it looks as though we're seeing this market begin to run out of steam. And I want to show you some of the indicators that we look at. One is, I want to take everything off the screen, and I'm going to show you our trade triangles, just our monthly trade triangles. And we'll scope this in just a little bit further so you can get a better idea. I think this will work okay. So here we are. We're looking at our trade triangles. As you can see, we had a trade triangle right here, and that's really kept going and going and going and going until it turned here, and we've just had one right here. They don't come about that often, and when they do, you really want to pay attention. We had one here, a big move up here. So when they occur, you really want to pay attention to what they're doing. And I think with our 100% negative reading and our monthly trade triangle headed down, our weekly headed down, and our daily headed down, it looks like you've got a pretty good trend on the downside that could actually go quite a bit lower. Let's take a look at a retracement, a Fibonacci retracement on this market, and let's take everything off the screen just to make it easy. So let's just clear this off, and we're going to take the same retracement. We'll just clear this off here, which is really pretty easy to do. Just click here, closes it, and then we'll scope this in just a little bit further, and we'll take the trade triangles off to keep it simple, and we'll take the Fibonacci tool like we would here, take the highs right here. Well, first of all, when you click on the Fibonacci tool, a little yellow box will come up here telling you it's actually open and ready to use. So you click here, drag it down to the lows that we saw. So we're going from high to low. So these are some of the important elements of a retracement. So we measured from the highs here to the lows right here. Okay? And that gave us our high point and our low point. These are major measurement points. Okay, so we're looking for a retracement 38.2%, which takes us around 20.10, so that's 20 and change. The 50% level will take us back to 1759, which is, let's say, 1760 rounded up, and the 61.8% is 15.08. So if we go from, let's say, with 2509 right now, we go down to 1508, that's a significant profit percentage on a $25 investment. Now we're talking about going short this market because all of our indicators, as I showed you earlier, are all headed down, and that means the trend is down. So let's scope this in a little further, get everything off the screen, and let's get closer in and take a look at the action. The other thing you can do, I'm going to take this off here, and I'm going to put another Fibonacci retracement in here. You can also use Fibonacci for short-term periods, and that would be from the highs that we're seeing to the lows here. You can see how we came very close to the 61% retracement level before we backed off. Now I think given all the trends that are down in this market, we should see this market continue to go lower, particularly since we took this low in here, which was a multi-month low, and we're seeing the market tend to roll over. So let's see how things play out, but for the moment it looks like Starbucks is on the defensive, trends are down, and we've seen the retracement levels fulfilled. So let's see how this one works out for us. Adam Hewison for MarketClub. Every success in the market. Thanks for stopping by.